Yo, welcome back to the channel everyone. Hope you guys are all doing well. It's Oscar, and today we're gonna talk about how to trade during days that the Fed is talking. Usually we have Jerome Powell. Everybody calls him J Powell. Usually J Powell's talking. There might be another Fed member talking, but ultimately when there's a Fed member talking, we usually have a day that the market goes one way or the other. So today is a perfect example of how that happened. In the morning, we had Jerome Powell basically at 30 minutes after open. He was talking. So ever since today when Jay Powell spoke, after he spoke, there was an initial reaction when he came onto the mic. Then we had a really big run up, and then we had just a crazy reaction. So let's get right into it. So on the screen you can see SPY. Obviously we could see SPY's down almost 3.5% today, which is like 14.5 bucks. From highs of 420 all the way down to like 404, which is insane to think about in just one day's like a one-day trading day. So let's kind of go into this into detail real quick. So this is on the 5, but ultimately on the 5 you can see a majority of it. We can drop down to like the 3 and kind of look at this a little bit closer. So if we come here, this is the first 30 minutes up until 7 o'clock. 7 Pacific Standard Time where I am in Vegas. This was when Jerome hopped on the mic. Immediately we had a large sell-off. We kind of bounced off this 415.22 level here actually. Ran all the way up to 420 and then we just started selling off. There was a heavy I really say it's a heavy rejection, but there was quite a heavy rejection. As you see, we have a big red candle, big green candle, and then we hit 420, and then things just started going down. So the two trades that I actually took today, let me pull those up. Two trades I took today were, pull this over here. We had AMD $97 call for next week expiration. This was, I jumped in these right as we basically started. I basically jumped in these calls kind of at the middle of this candle. So I kind of got in late. I should have gotten in, let's say here for a quick scalp. Jumped in, I got in towards the top. Up here was maybe 5 or 10 seconds into the trade. I was up maybe 10 or 15%. And then I thought we were just going to continue going up because there was so much momentum. Obviously not as much volume as the first candle, but still relatively good volume. And then we just started selling off. So got out of those for a let's see, I had 5 contracts, so 5. It was like a $271 loss or something on those. But since I saw we had such heavy rejection and obviously there was more selling going on than buying, especially on a day like this, there was way more selling than buying. There was going to be a lot of buying pressure to try and get anything in the stock market back up to the upside. So I jumped in a AMD, this should have been AMD $96 put. Got in on those at 26 or 2.6, so 260 a contract. Got out of them at 354. I had 2 of those and a SPY 415 put expiring on Monday. 219 up to 383. So one reason I did take the SPY put, obviously we're big heavy candles selling. I don't remember, did I get in? I think I got out here at 412. So obviously at this point I believe my contracts were up like 100% from maybe around here or so. So if I would have held them all the way down to here, I think I looked somewhere around here later on in the day, and I think the contract was up to like 900 or something from the 383 that I sold it at. So I had a long ways to go. AMD, I didn't even look at this, but AMD would have been a strong thing to hold on to too, because that thing just did not stop. Definitely tried to bounce here a couple times and then hit it, rejected, and then just kept selling off. SPY tried to do the same thing. It bounced off, and then just couldn't hold it and just kept going. So Similar thing goes with NVIDIA. I've never traded NVIDIA yet, but NVIDIA just hella big selling, almost down 10% for the day. But I guess the main thing to kind of look at this, let's say if you wanted to trade during a day that a Fed speaker talks, well, like a perfect example would be here. If you would have waited just after this candle when Jerome Powell got off the mic and the market decided to take a reaction, you would have just held these puts, or let's say held your short all the way down. You would have banked from 420 all the way to 404, then a $16 drop. Let's say if you were in puts, those puts would have been at least a couple 100%. Shorts, you would have made a lot of money. But the main name of the game is when Fed speakers talk, usually it'd be a good idea to wait after they talk, get a clear market direction, and then you're just set, ready to go. And you can basically just ride it out. You don't need to worry about a thing. Set a stop loss, set a stop order where you want to get out, or set the stop loss for for how much you want to take profits, and just let it ride. Because days like this, they don't happen often, but when they do, they're days that you can absolutely bank, and it's always a good thing to kind of take into consideration and just think about. So hope you guys enjoyed this quick little video. If you guys did, please drop a like. If you have any comments, put those down below. If you're new here, please consider subscribing, and I'll catch you guys in the next one. Peace.